So, good morning. We're going to talk about money, and more problems. So, raise your hand if you've ever experienced a cash flow crunch. Okay, cool. And what are some examples of a cash flow crunch? Just shout them out.
More bills than income.
More bills than income. Here's a crunch for you.
Yes. Word the simple soul.
Yeah. What are some other ones? There's a ton.
Stocking up on inventory at one point of the year and then not having enough to
sell.
in the meantime.
Yes, crunch for you. Did it go in your purse? I could play basketball.
Needed capital investment, which you know you need, but you know the revenue's going to be coming down the road.
Cool. Good one. Not a good thrower. Maybe I shouldn't do basketball. So, 3 signs that I know where there's a cash flow crunch is that we're paying our bills late, right? We're paying them late. We have low money or no money in the bank account, or we're struggling to meet payroll, or even worse, as a business owner, you yourself are not putting yourself on payroll. So what I'm going to do is I'm going to share with you 5 money management strategies on how you can keep more money in your business. But before I do, I'm tell you a little bit about myself. I don't know what happened there. But just to tell you a little bit about myself. So I founded Nitram Financial Solutions. We originally started out as Empower to Thrive. We do money management strategies for business owners, helping them find the money leaks, increase their cash flow, and maximize their profits. Certified QuickBooks Pro Advisor, Certified Zero, Bronze Advisor, and a bunch of other certifications up there. Been using QuickBooks since I was 5, been doing accounting since I was for about almost 20 years now, and I know I'm only 25, but that's okay. So, really just got tired of working 60 hours a week for somebody else, so I decided to start my own business, not knowing that I would be still working 60 hours a week initially, but that's okay because it's all mine and it's our baby. So, get great support team for my family and my kids. They're kind of my little minions around the house, so that's pretty much it. We've gotten a few awards and honors over just our short 3 years of life. So we're just here. My mission is really just to help business owners thrive. That's my whole moniker, is that they can thrive financially in life and in business, so they can create wealth and legacy. That's what we're all about. So let's talk about the 5 strategies. So the first strategy is to plan for profit. And so you have to plan for profit. So I have a client who they did about $1 million a year in business, and they were like, we don't make any money. We're showing a net loss, and it's because they didn't plan for profit, right? So she says, I really want to grow this business. I want to take it, even bigger and even higher. So we sat down, we made a plan, and then the next year she exceeded her goal, all because we planned for profit. So how do you plan for profit? Say, how do you plan for profit? Do you know any ways to plan for profit? Budget? That's good, you guessed it. The B word is the first one. You have to prepare a budget. And nobody ever wants to prepare a budget. Everyone hates budgeting, they dread it, and it's really because you can't budget for what you don't know, is what I've found people say is why they can't do it. And so you have to be able to prepare a budget, though, because without preparing a budget, you have no idea what you're doing, right? And a budget is not really all that complicated. It's just a schedule. It tells you how much money you're going to bring in the door and what you're going to spend it on. It's really just that simple, right? The quote by William Feather says, "A budget tells us what we can't afford, but it doesn't keep us from buying it." We're still going to go out and find it. We're just going to find another way to get it, right? So you have to be aware of it, and you have to still do it. So what you have in front of you is a worksheet. We're actually going to create a little mini budget. So the worksheet that says money management strategies to keep more money in your business, the very first section is a little mini budget. So what I want you to do is, for numbers 1 through 3, I want you to write down 3 sources of revenue that come into your business, just 3. And then underneath it, you're going to write 5 expenses that you absolutely have to pay, no matter what. They are what I call the bills that you have to pay to keep the lights on. Might be the lights, utilities, labor, payroll, insurance, whatever those 5 main things that no matter what, whether you sell something or not, you have to pay. And then you're going to take the difference of the two. This is going to be like your mini budget that we're going to start with. Then we're going to subtract your expenses from your revenue, and you're going to either come up with a net profit or a loss. And if you have a loss, that's okay, because this is not a complete budget. But what I want you to do tonight is I want you to go home, there's homework, and actually finish the entire budget so that you can know how much money you bringing in, that you expect to bring in, and then how much you got to spend it on, and then come up with what your true net profit is for the whole month. Then you're going to take that and you're going to multiply it by 12, and that's going to be your first draft of your budget for the whole fiscal year. It's really just that simple of just taking what you think you expect to make in income and just subtracting the things that you absolutely have to pay. And then you can add in some other things that you're like, you know, I really would like to get a new MacBook, or I really want to, you know, get our website redone. You know, try to figure out what months you can actually get those expenses in as well. And then take the difference and figure out if you're going to have a net profit or a loss. And we're going to do some more with that in a minute. But the key is that you have to put it on paper. You have to write it all down. So I always say, you know, I'm a big proponent of accounting software, but when you're doing a budget, you should start it out with it in Excel, because you can't keep it all in your head. You have to put it down. You're not going to remember come June, what did we say we were going to budget? How did we say we were going to do this? So you have to get it out of your head, put it all on paper, because if you don't, your brain's going to explode. It's really just that simple, right? So this is a sample of an Excel spreadsheet where we created a budget and we put in the revenue and all of the costs and expenses for one. That's the total column, but there were actually 12 columns, one for each month. So you can do something simple like that. It doesn't have to be all fancy, you know, and done up. It can be really something just that simple for you. So when you're doing this, and you may have experienced, well, maybe I have a loss. Why do I have a loss? So one of the things you need to look at is your pricing. And people are always like, you know, my pricing is fine. I think my pricing is okay. But you need to look at your prices, because that's one of the reasons why you are experiencing a cash flow crunch. Because either your prices are not, they're too high, and they're too low, and you need to raise them up. So you think that what you're charging is enough to cover all of your costs. But a lot of business owners, they say, well, I'm just going to charge $100, not knowing that everything they do costs $102. So you have to really look at what you're spending money on to come up with whether your pricing is right. If your pricing is good and you feel like it's okay, then maybe it's a volume play. So depending on what you do, you may just need to have more sales. So at a dance studio, you're not going to obviously charge $100, $50, $70. You're charging a smaller fee, but you need a large volume in order to meet your goal. So you have to figure out, well, how many people do I need to take a class? How many widgets do I need to make? How many packages and programs and products do I need to sell? So at the bottom section of your sheet is a sales volume. So you're going to take that net profit or loss number from above, and you're going to put it where it says budgeted net profit A. If it was a loss, still just put it as a positive, so that for the example, it kind of makes sense when we do the math. So you're going to put that number on line A, and then underneath it, you're going to put how many months are left in a year. So we have 11 more months left in the year. And then you're going to take that 11 and divide it into what line the number is on line A. So you might got to pull your phones out and do a little math on the calculator. And that's going to tell you how much do you need to sell per month. Right? Once you get that number, you're going to divide that, the line below it where it says D, you're going to put the price of the lowest item that you sell. Whatever the lowest priced item is that you sell. And the reason why I say the lowest, because that's going to be the one that you're going to need to sell the most, if that's the only thing you sold. Everything else that costs more is kind of icing on the cake. So the lowest priced item that you sell, you can put on that line. And then you're going to divide that into the number above it to figure out how many of them do you need to sell. So my example, I came up with $60,000 net profit, divided by, in the example I have on here was 12 months, which means I needed $5,000 a month. And the lowest price item is $250, so I need to sell 20 things at $250 a month to hit that goal. It's kind of how the math plays out. So you need to know that it may not be your prices. It may just be that you need to sell more of what it is that you make or what it is that you do. So that's how much. And then you need to also set goals. So creating the budget is not kind of just pulling it out of the sky. You need to have a goal as far as where you're trying to go, what you're trying to achieve, what you want to reach in your business. So you need to set your goals. And we all know that our goals need to be SMART goals, which are specific. Specific as in who, what, when, where, and why. You need to know exactly, be clear and concise on all of those things. They need to be measurable. They need to have some type of dollar value again that you can measure against. So you can say, you can track your progress as you go along. They need to be achievable. So achievable as in how, that's the how. So the specific was who, what, when, where, and why. Achievable is like how we're gonna do it now. We came up with that. And then the R is realistic. But it needs to be realistic to you. Doesn't need to be realistic to me. If you thought this thing through and you got it down pat and you know that you can do this if you follow those steps, then that's realistic to you. Doesn't matter what your sister, brother, mother, cousin thinks about it. It has to be realistic to you. And they need to have a time stamp on it. So when am I going to achieve this? We wake up and we say, I want to make $1 million this year. Okay, by when? Do I want to make it by the end of this December? Do I want to hit it by the end of September? Like, put a time period on when you're going to achieve that goal. So when you're measuring it, you can track your progress to see if you're really on track to hit those goals. So that's how you plan for profit. The second money management strategy is coming up next. So do you ever feel like this? Like the money is constantly flying out of the window, right? No matter what you do, the money is going out the window. And that's because of strategy number 2, which is robust record keeping. Nobody wants to keep the records. You're too busy doing the weeds of your business, right? You're the CEO, your chief everything officer. So the record keeping always falls to the wayside. But you have to keep track of your records so that you can maintain control of what's going on in your business. If you don't know what's going on in your business, then how can you expect to grow your business? Don't get so caught up in the busyness of your business that you don't know the numbers in your business. So some ways that you can track your records is you can use any of the applications that are out there. These are just a few that we're certified in and that are out there. Everyone knows QuickBooks. They've been around for years. They're kind of the most popular in the States. Xero is another big competitor, probably into its biggest competitor as far as softwares. They're 100% cloud-based as well. Wave is also 100% cloud-based, and what a lot of people don't know is that it's free. They actually target micro businesses. So if you make less than a certain amount, which I think is $250 maybe, that they consider, but they don't know. They don't like kick you out because you hit that goal. You exceed that. But they are geared for small businesses. They get sponsorships from other companies to help fund the product. So you can definitely sign up for Wave if you're not using anything. If you're using Excel, let's get out of Excel. Let's get in there because you can't track your metrics in Excel. Excel is great for just putting everything in, but you can't really see how much you made, how you're trending, how you're progressing, what your ratios are. You can't see any of that in Excel, so Wave helps with that. FreshBooks is also cloud-based, but to me it's more for a freelancer. You can't get full-blown financials, but you can do project management, you can track time, you can create electronic invoices in it. So it is an option as well. So those are some of the softwares that we recommend that you use to track your finances. So you can stop being the mad scientist. Who's the mad scientist? The person who mix and mingles their money in their business. So you got money over here. I got my checking account for my business. I have my checking account for my personal. Oh, but I need to pay this, so I need to take this out of here and put it over here. Oh, but I need this. I'm gonna go spend and use this card because I didn't have enough money in this card because the customer didn't pay me on time. That's mixing and mingling the money. So we have to stop mixing and mingling the money. It seems so easy because it's all our money, but at the end of the day, the IRS says that you and your business are two separate legal entities. So you can't take from your business to fund your personal life that way. You need to pay yourself in payroll, just like you would if you had a job. So you can't mix and mingle the money. So your second homework assignment, if you do not have a separate account, because I actually had a client who told me, I don't have a personal bank account. I don't know how that is, but okay. You need to have a separate personal account. So by the end of the weekend, you should go to the bank and get a separate bank account. And so start keeping the business in the business, keep the personal in the personal.
When you put personal money into the business, is that like an
It's
investment?
exactly. It's considered an investment into the business. So you can't put it in and then next week say, oh, but I want it back. Because how is it going to help the business grow? At that point, you're just moving money around. So yes, if you put it in the business to fund the business, to help the business grow, that's fine. But we can't put it in and then 2 days later take it out and then next day I go and swipe and use the business card because, oh, I really wanted these new shoes. Like, you can't do that type of stuff.
And without going into tons of detail,
Mhm.
are there special documentation requirements for when you do invest in your business?
You should, so if you're just writing a check, you should definitely keep the copy of the canceled check to show that you invested that money in the business. If it's, you were out of town and you didn't have your business card, you saw some products or something that you wanted, then keep the receipt so
Right.
that the receipt is there to validate that it was actually something business related. That I went to Costco and got office supplies because they're cheaper, they're in bulk, and I didn't buy $500 worth of groceries, for example.
Right.
That's someone I see a lot. So, just keeping the receipts, keeping copies of the checks or deposit slips if you do an actual cash transfer or cash writing a check into it.
But no IRS requirement?
That is it. Like the
Oh, good.
IRS, that's the receipts.
No IRS form?
No.
Gotcha.
No forms or anything. Their proof is that they can look at some document that you didn't create,
Right.
basically, that proves that that's what how that transaction really happened. Yep. All right. So this happens all the time. Want to come to my class? Yes. Want to come to my workshop? Yes. Want to buy my book? Yes. We want to support everybody. So we're saying yes to everybody. And as a result, strategy number 3 is that we're overspending. So we have to stop overspending. Overspending is over at this point. Young lady comes to me and she says, we're talking about payroll stuff. We go into business and she says, I don't even really know how much money I made this year. And it's October. What do you mean you don't know how much money you made this year? She's like, I don't have a clue. So I said, okay, that's fine. Go home, take your bank statements, add up all the income that came into the business that was not money that you invested, that came from customers. That's kind of a ballpark. You kind of get an idea of where you are. So 2 hours later, she calls me back. She's like, oh my gosh, I made $80,000. It's like, that's awesome. She's like, I don't have $80,000 in the bank because she's overspending. She's mixing and mingling. She's spending the money. She's not tracking it. I don't even think she was using Excel. She wasn't using anything. So all she knows is that she had bills to pay, so she was paying them. So this study was done on trendhunter.com back in 2012, and it says 52% of Americans spend more money than they make. They admitted it, that they spend more money than they make. Out of that 52%, 21 of them say they have more monthly expenses than they have income. Right? And of that, 13%, only 13%, made the adjustment or had a plan to make the adjustment in the upcoming month to kind of offset and get back to where they were. So 52%, that's half of the room, spends more money than they make. Naturally, it just happens, right? So that's a pretty big statistic, and part of it is because of money leaks, where money is just leaking out of your business here, there, and everywhere, right? You're spending without keeping track of it. One of the big ways that we're going to do is we're going to figure out how to cut costs. Bank fees, huge leak. A colleague told me that she got a client, this was last couple years ago, she had a client, and she's like, you're not going to believe how much bank fees this person pays. I was like, how much do they pay? How much do you think their bank fees were in a 12-month period? Just take a guess.
5,000?
I was against 2, but.
30,000.
What?
Good grief.
How could you do that?
I don't even know how they still had a bank account. Like, I don't even understand how the bank still honored their business. But they were bouncing checks, overdraft fees. And for the bank, I guess you figure, hey, we're making money off of her. Let's just let her keep doing what she's doing. Because, you know, when you overdraft once, and then after so many days, they still keep charging you because then you're overdraft for 5 days, and then you get an excessive overdraft fee. So you give you, on top of the 36 for 3 days, then you're gonna get $7 every day until you put money back into that account. So it adds up very, very, very quickly. I mean, 3 to 5,000 is like unfortunately, is a typical norm that I see a lot. So we have to not do that. So we'll come back to that. So on the back of your worksheet, at the very top, there's a section that says cutting costs. And what I want you to do is list 5 subscriptions, because subscriptions are another big money leak. Ever got a gym membership and then after February, March, you never went back again? So now a lot of the gyms, you know, they let you do at least I think, they don't make you commit to 3 years like you used to have to do. You signed up and you were like, oh my gosh, I've committed to 3 years going to the gym, and I've been like 5 times. So things like that happen all the time. We buy a software, we think we're going to use it, and we don't. Or we get a software, we don't really use it fully, we use it halfway, and then we're not getting the full value out of it, right? So make a list of 5 subscriptions that you can either cut completely because you're not even using it, you don't really need it, you just keep forgetting to go call and cancel it. Or maybe there's subscriptions that you're like, I think I can find a better solution for a less expensive price. Earlier we were talking about Dropbox versus Google Drive. Because Google Drive is free all the time. Dropbox is only free to a certain point, and you got to jump through all these hoops to get the extra space before you're forced to buy it anyway, right? So Google Drive could be a better solution instead of Dropbox as far as saving costs. I do this exercise every year around August or September. I go through my financials and I say, okay, so where can I cut costs? And every year I cut about $7,000 in costs just because of subscriptions, because you're thinking, oh, it's just $9 here, it's $10 there, but when you multiply that by 12, and then you multiply that by how many different softwares you're looking at, how many subscriptions you're looking at, it can add up. So I say if the subscription is not necessary for you to operate, you probably don't really need it. And then there are, like I said, other options out there. Like the example with the softwares. If you know you don't want to keep paying Intuit $20 a month or paying $0 their fee, then you can use Wave, because Wave is a free software. And I'm not saying anything is wrong with any one of these. I'm just using them as an example so you can kind of see the different prices. But subscriptions are a huge, 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 huge way that money leaks out of the business. Another way that money leaks out of a business is that we're not matching our marketing to our budget. We're kind of networking wherever we want. You know, oh, that sounds like a fun happy hour. A lot of people don't go to happy hour for networking. They go to happy hour for the wings and the drinks. So being strategic about your marketing, being strategic about where you go when you're doing your networking, making sure that where you're at, you're going to meet either people who you can partner with to help you grow your business, or potential clients are going to be in that room, but not just going just for the sake of going just because you want the wings and the drinks. And you're like, hey, maybe I'll meet somebody there after all, because you may or may not. You'll get a bunch of business cards either thrown at you, or you'll be out of business cards and you've given them to no one, some people who are no real value to. It's one of my pet peeves is people are like, here's my card, where's your card? Hi, how are you? My name is Sherrell. What's your name? Don't just throw your cards at people. Like, go with an intention. And when you do network, have the intention to meet at least 3 people. Everyone wants to go and get as many cards as they can. Well, you're really not going to have the time to call every single person, and every single person is not going to be of value. So go with the goal of, I'm going to meet 3 really good contacts out of this meeting, just 3. And you will be surprised that when you focus on just trying to get 3 good quality contracts, not only do you still have business cards left, because those get expensive when you got to keep ordering them, right? But then you've got 3 good quality contacts, whether it's a partnership or a potential client. Okay, that is not supposed to be blank. So what I want you to do is the next time someone says, can you buy my book? I want you to say no. If you don't need it, if it's not of value to you, I want you to say no. If they say, can you come to my workshop, and it's not of value to you, say no even louder. If they say, oh, I really, really think you should go to this conference, I think it's going to be amazing, and it has no value to you, then again, you say no. Because you have to stop overspending to stop the leaks in your business. Strategy number 4 is forecast and weather the storm. Forecast is like a really big finance word. It's probably the biggest word you're going to hear from me in as far as finance and accounting go. Forecasting and weather the storm. Forecasting seems so hard and big and daunting, but we forecast every day when we look at the weather and try to figure out what we're going to wear, what coat are we going to put on, because we're trying to see how hot our coat is going to be. That's all a forecast is. It's just predicting what's going to happen in the future. So when you're doing your numbers and your budgeting, you have to predict what's going to happen in the future. What could potentially happen? Could my sales go up? Could we get this new project? Could we get this new contract, this new business opportunity, these new products that we're going to spend money now, but we're going to reap the benefits later because they're going to sell like hotcakes? You have to project and put those forecast adjustments in your plan. Or you need to sometimes we need to forecast backwards. Like when the weatherman says, oh, it's only going to be a light drizzle, and it's going to ends up raining like cats and dogs. Like you have to project or predict that, oh my gosh, the warehouse can't give me those products in time. How is that going to affect my sales? I can't remember where I was. I met a young lady. She, one of my network organizations, and she said she sells coats for toddlers. It's a car seat. It fits with the car seat. So something I didn't know is that that coats aren't made to go under car seats. You're supposed to put the child with the seatbelt on their chest, not on their coat, because when they hit an accident, it compresses. So she makes a coat specifically for car seats. But her manufacturer was a little behind, and she didn't get them till late November. That's a little late for the holiday season, right? So she has to make adjustments on how that's going to affect not just her year end, but the upcoming months coming into January, February, and March as well. So you have to make the predictions and the adjustments to your budget when things aren't quite going as planned, because just like life happens, business happens too. Part of that is you may need to reduce your costs. So when you're doing forecasting and projecting, you're going to either increase your sales, and if that doesn't work, you may need to cut costs. And we talked about that briefly. You have to spend the time to look at where can I cut costs? Because if you're going 3 months, 6 months, 9 months, and you're still experiencing the same crunch, you have to cut back on the costs, because it can cost you your business. You'll end up borrowing money. Borrowing from Peter to pay Paul can only last so long, because Peter only has so much money, right? So you have to take the time and sit back and cut your costs. And you may need to shuffle things around a bit. Maybe the opportunity isn't going to happen in March, but it could happen in June. So pushing the numbers forward and then pushing the costs associated forward, making those adjustments and knowing, okay, so this can still actually happen. So you're not left figuring out what happened. Strategy number 5 is intellectual oversight. So you need to actually know your numbers. You need to monitor your metrics. Nobody wants to look at the numbers. It's one thing if you don't want to do the day-to-day bookkeeping and you want to hire someone, but every single month you need to be looking at how you're tracking against those numbers. How are you tracking against your budget? You know, there's tons and tons and tons of metrics out there that you need to look at so you can know that you're seeing clearly and so that you can know how your business is doing, right? So on the back of the worksheet, there's a section underneath. I just listed a few KPIs. These are key performance indicators is what that stands for. These are the basic ones that you should know and look at in your business. They tell you different points. The current ratio and the quick ratio tell you basically how much cash you have to liquidate within a certain period. Your receivables and payables turnover, how fast are you churning, is the money coming in versus how fast you're spending it, right? Same with inventory turnover. How fast are you buying it before you sell it? You need to know those numbers and be on top of those metrics so that you can actually know what's going on in your business. And so you can know how your business is trending compared to last month, compared to last year, compared to your industry. What's the industry norm? Are you like way out of pocket? You know, not knowing the numbers prevents you from knowing any of that. because you want to stay ahead of the curve so that you can actually have more money in the bank. Before I forget, the second worksheet that you have is actually a free resource that I have. It's a financial health checkup. It's a questionnaire. You go through and you answer all these questions, and at the end, you add up your score, and it tells you if your business is stable, critical, or at risk. So if you want to get a copy of that, make sure you complete that second worksheet, and then I will get a copy of that to you. All right, strategy number 6, right? That's 6, right? Is taxes. It's that time of year to get your taxes done. Everyone dreads January through April for this purpose, but you have to stay on top of your taxes, or you're going to get a knock on the door from the one uncle that nobody wants to knock on. He's the one uncle who does not give you money. He takes money from you, right? We all had that uncle. How many A's did you get on your report card? I got 5. Awesome. Here's $1 for every A, or $2 or $5 if you had a really good rich uncle. You got $5 for every A, but this uncle is not going to give you money. He's going to take money away from you. So you have to make sure that you stay on top of your taxes. Even as a small business, you still need to make estimated tax payments. If you're not on payroll, and even if you are on payroll, depending on how much your payroll is, you need to make estimated tax payments every single quarter. So get with your tax accountant. They can actually do tax planning so that you don't overpay or underpay. Because nobody wants on April 15th to find out that they owe $10,000. Because nobody has it lying around, right? So make the estimated payments all during the year, no matter how big or small your company is. And with payroll, pay the payroll taxes on time. Hire a payroll company, please. A lot of small businesses want to I'll just do the payroll in-house because they can take the payroll and then I can pay the taxes on the quarter. And then come the quarter, what happens? You didn't get that product to sell, so now your cash flow is low and you can't pay the taxes on time. And then you get hit with the penalties and the interest, and they add up quickly. Payroll taxes is probably the worst kind of taxes to get in trouble with. I used to have a client who was no longer a client for other reasons, but they were behind on paying their payroll taxes. They never got on top of it, and in the end, a $45,000 tax bill turned into a $90,000 tax bill because of penalties and interest. It is not a game. That's a racket, I believe. But don't IRS didn't hear me say that. So make sure you pay your payroll taxes on time. So let's recap. Did you realize my strategy spell profit? No. Oh, I gotta do better. Okay. So what was the P?
Plan for profit.
Plan for profit. What was R?
Robust record keeping.
Robust record keeping. So planning for profit is making a budget, right? Robust record keeping, tracking your numbers. What's O?
Overspending.
Stop overspending. Get a handle on your expenses so that you can stay in control of your expenses. What was F?
Forecasting.
Forecast and weather the storm. So predict and plan ahead for those days when it's not going to be so great. I.
Intellectual oversight.
Intellectual intellect. Well, intellectual insight is what it is. So it's knowing your numbers, monitoring your metrics, making sure that you know what is really going on in your business. Not living in your bank statement saying this is how my business is doing because I have this much money in my bank. Like really knowing how much your sales were, how much your costs were, so you can know if you're really making a profit or not. And what was T? Taxes. Right, taxes. It's that time of year. So stay on top of your taxes, pay your taxes on time every quarter so that you don't end up getting hit with penalties and interest. And if you don't watch The Profit, you should watch The Profit. It's an amazing show. So I want you to avoid the crunch so you can keep more money in your business. So what I want you to do is raise your right hand. I know it's early. Raise your right hand and repeat after me. I will finish this worksheet before Monday morning. Monday morning. Okay, you guys sound really, really sluggish. I want you to do it again. I will finish this worksheet before I start work on Monday morning. So you have all weekend. The blizzard is over, but you still have all weekend to finish your budget, to find your costs that you need to cut, and to figure out how much it takes, how many items you need to sell, or how many people, or how many widgets that you need in order to hit your goals for the year. Don't forget to fill out the worksheet if you want to get the free resource. And that is what I got for you today. That is how you keep more money in your business. Any questions for me?
Do you have any tips on looking for a business checking account if you're looking to get the best deal? I know bank fees are a huge one.
Definitely do the research on the bank fees. Also look at convenience. So, the larger banks are more convenient because they're on every corner, but your fees may be higher, right? The community banks give you more of that business partner type of feel. So it's really a preference if you want the convenience, because with the smaller community banks, they're not in as many places, but they do give you discounts on fees. Like most of the community banks I know, like ATM fees, they don't charge you because they know they're not everywhere. So you'll charge, but you'll get it back. So kind of just gauging that, ask other business partners, other business colleagues that you know who their banker is and if they like their banker.
I got my business account is with a credit union, and it's amazing. Like I just needed to borrow some money to buy new cameras, and they looked at both my account, personal and business, and they gave me a personal loan. They didn't give me a business loan, but it was pretty easy, and my business account is free. It's completely
Well, that's
free.
good because a lot of credit unions don't offer business accounts, so you have to kind of find one. If you're a credit union person, you like credit unions, then you can actually. But it's like anything. You have to do your due diligence. You have to search and figure out what works best for you. But getting a referral from someone is always, that doesn't just apply for business relationships. That applies across the board. So if someone says, "Oh, you have got to call John because he is the best banker in America," then you might want to call John, check John out, see if you like John, because you still got to meet John. You still got to see if you like John that much.
Yeah.
But personalities and all that matter. But if someone tells you that they have a good, ask around who you know who has a business if they have a personal banker that they don't know. I do know the smaller community banks, that's their thing. They build that relationship with you.
Yeah.
Same with the credit union. They build that relationship with you. And they're more likely to tell you when you get to the point where you want financing. They're more likely to tell you, okay, well, we have to tell you no, but here's why, and this is what you should do. Most of the big banks are just going to be like, your credit's shot.
Yeah.
Okay, well,
Just like a blanket.
yeah, so, how can I fix it? What can I do?
Right.
You might not get all of that with one of the bigger banks.
Yep.
So, but you got to do your research and dig around because there are a lot of community banks. There's a lot more banks than we know of. The world is not all Bank of America. That's a good question. Any other questions?
What sort of bank fees, outside of interest on borrowed money, would you consider acceptable for a small business?
Maybe only the monthly fee because they have to charge you, but everything's negotiable. So we follow a program called Profit First. Have you heard of it? It's a book by Mike Michalowicz, and it's called Profit First. And in that book, he tells you to open up like all 5 or 6 different bank accounts. So immediately the thought is, well, I don't want to pay $12 on all these accounts. So you go to the bank and they have programs, or you can negotiate with them, so that you're not paying $50, $60, $70. You're only paying $20 or $30 a month. But really, the goal is not to have any other bank fees. They have to make money, so that's how they make their money, off the fees and interest that we pay as individuals and businesses. So I would say no other bank fees are acceptable, but every now and then something happens. But it's when people are right, but some people are getting into the habit where every single month we're paying $100, $200, $300 in bank fees. Like at that point, it's time to really look at what's going on. But if something happens because a customer's check bounced, you really can't predict that check will bounce because you're thinking they gave you a check in good faith.
Right.
So you can't stop that. But if you're bouncing checks because you're trying to play Russian roulette with the checks that you already wrote to see who can clear first, not really the best idea.
I think that's called check kiting.
You think it's called what?
Check kiting.
Exactly.
It's against the law.
It is against the law. You are correct.
People do that?
Yes, you would be surprised of the things that people do. I got stories for days. I see all kinds of things because I'm that close to people in their business and their numbers. So once they feel like, oh, okay, well, I can trust her, they're like, pants down, shirt open. I see it all. And I have to be like, okay. wait, hold on. I don't know if I was ready for all of that just yet. So yeah, people do all kinds of things. Good thing I can't be a lawyer. I could never be a lawyer.
And how much do you charge for consultation?
So we charge fixed rates and value price billing, but we could discuss that offline if you're interested. Okay.
I was just about to ask, you do individual consulting, obviously.
I do. We do outsourced accounting and bookkeeping services, so monthly, quarterly bookkeeping services. We do consults for, you just want to do a financial assessment to kind of see where your business is, or if you're using QuickBooks and it's in the words of a client, it doesn't like you and you need a little help with that. We can help you kind of get that straight and get everything caught up. If you have that box of receipts and April 15th, it'll be here before we can blink. We can help get all that stuff done. We offer payroll services too through using an outsourced, we use an affiliate partnership, but we do not do taxes. We have a CPA that we refer business to for taxes. Yep.
What about auditing?
You have to be a CPA to do audits.
Do you have a connection for that?
I do. I have a few CPAs for audits, yeah. That's a compliance thing, so you have to be a CPA. So you don't hear me say audit much because I don't want to blur that line. Yeah. But you have to be a CPA to do audit.
Alright.
Cool.
Any other questions?
Any other questions? You guys are quiet. I'm usually like,
Your numbers are feeling sad.
oh, don't feel sad. Don't feel sad.
No, I just found like $3,000 I could.
See?
Yeah, like in 10 minutes.
In 10 minutes from just 5 things, you see? She found
Yeah.
$3,000. You would be surprised when you actually, that's why I say you have to sit down. If you can't do it monthly, minimally on a quarter. But don't go beyond a quarter and not really know what's happening and I get there's some busy periods, things happen, life happens, all of that. But you have to look at it minimally on a quarterly basis to be able to say, okay, what are we really doing in this business? How are we really tracking? Because you would be, and you should even break it down. I mean, I don't know if you guys, depending on what your business is, as far as customer. So in my business, I track income by customer and expenses by customer to see if we're charging the right rates and the right fees. And you have some where you're like, oh, I made a nice little profit off of them. And then some you're like, well, I knew that client was a sucker. So, even tracking down to that level, how profitable are you in the business? Because at the end of the day, we're in business to make money. Nobody wants to pay taxes. Let the tax person get creative on how to not pay taxes. But we're all in business to make money. We can't do anything without making money. You can't grow the business without money. You can't hire people without money. You can't be philanthropic without money. I don't know how they came up with the word philanthropy, but money should be in there because that's the root of it, right? You have to have money. So people are always like, I don't want to show a profit. Why not? If you pay taxes, that means you made money. That's a good thing, right? So we want to show profit. There's all kinds of tax strategies and regulations, legal, that the tax person can figure out how to get your tax liability down. So I wouldn't worry about that. Let that be the furthest thing from your mind. Yep. Well, thank you very much.
Thank you very much. Thank you.
I didn't give my talk fast disclaimer, so if you need me to read